Hello, and Happy New Year 2016 to everyone. Well, we had a MEJT target of 2050.03 from December 28th. It was a regular target and also a target of an ultimate signal. That printed New Year's Eve, and look what a beautiful support resistance level that was. There's a new MEJT target, most likely to print when the market reopens Monday of 2054.59. New Year's Eve, we had an ultimate sell signal early on. The target was pretty close, and that printed. It's a color-coded target here. This is from the old signal. In the afternoon, we had a buy signal, and that one printed too. MEJT says this drop is a false move, and at 2054.59 will print most likely Monday. Well, we have a relatively positive pattern here. We have a gap down, a new low, a recovery all the way, holding over the old low. And then in the last 5 minutes, a wall of selling into the close. I think it's pretty obvious that smart money is not going to wait until 5 minutes before the end of the year to sell with a bandit like this. A wall into the close like this typically finds the only people willing to take the other side of the trade, which I view as selling by the amateurs. The only people willing to take the other side are the pros. They usually get their money returned to them very quickly, and usually a lot more. So I think the odds favor gapping up Monday, taking out at least this high, probably this price, and more before the day's over. But what the bulls really have to do is to take out this high, because this is a pattern which typically closes near the day's high, and if we don't, we really have to have a gap or at least a very early trade over this high, or negative things are coming. So if I'm wrong, it'll be obvious from the open, but I want a gap up at least over this high, and preferably even over this one. Everyone likes to make New Year's predictions. Around now, it's an old saw that the first week of January predicts the month, and the month of January predicts the year. It's reasonably accurate as far as the year is concerned, as long as you include January's results with it. In other words, if we drop in the month of January, the odds are good that we drop for the calendar year, but it's only so-so that we drop for the remaining 11 months of the year, or even the next 12 months from February 1st until January 31st of next year. As far as the first week of the year is concerned, it's supposed to predict the month, but what's an observation of mine is that the first 1 to 2 trading days of a year tend to be a contrary indicator. In other words, if the market is going to drop this year, as I think it will, I'd want the first 1 to 2 days of the year to be up. Here was the diamond on stilts that we chatted about. Here's your diamond, here's your stilt, here's your stilt, here's the target, and I think that's pretty close. We're now on a sell signal from Trader Vic. As far as the short-term pattern is concerned, you connect these two lines, these two endpoints. We stopped right at that support level, so we have a drop to support, but not through it. It's a nice place to spring up on Monday. I'm not convinced that we've completed this consolidation here, but if we have and I'm wrong, then that's wave C completing wave 2, and we have a big drop. Let's look at a few other things for why I think the top's in. Let's call this a stilt. Let's call this a stilt. This is your odd-shaped diamond. Let's take the height of the diamond. From here to here, and here's the target. I think that's pretty close. This is a return to the origin of the left stilt, and that first return usually holds. I think we have an Elliott wave pattern which is compatible with the move being over. I've seen a wave count in which this is the end of wave 3 instead of wave 5, and they call this an ABC, ending wave 4, and they call this wave 5 up. It shouldn't be overlapping. If that's a wave 5, it should be impulsive, and I think it's really a stretch to call that an impulsive move. Once again, we have a major league sell signal on the monthly chart. This is a sequential sell. When you get one that takes years and years to form, you would anticipate the decline to last years also. Here's a weekly chart. We have a major trend line. You connect these two lows. You'll see that we dropped in a straight line fashion right at the trend line, came back exactly to the trend line, and then stopped. I think that trend line is going to hold. If you take waves 1 through 3, you'll see that wave 5 is a nice Fibonacci 23.6% of waves 1 through 3 combined. Here's your drop, here's your retracement. This looks like a major league top to me, and I think we're going to drop this year, and I think we're going to drop for years to come. So the call is Monday, gapping up sharply, have a nice rally lasting 1 or 2 days, but then look out below, and that's today's call.